This is Alan Bush with the Daily Financial Futures Forecast for Thursday, April 23rd. Starting out with the stock index futures, we did see some pressure in the overnight trade. This linked to weaker than expected corporate earnings reports. However, we have seen some recovery. Even though we did get new home sales coming in at a very dismal number, coming in smaller than expected, futures are holding up very well today. I think this is probably due to ideas that any reports that show economic weakness here in the U.S. may influence the Fed to delay a rate increase. Now, we continue to feel that the Fed will not be raising rates this year. They may raise sometime in the first quarter of next year, even though the consensus view is that the Fed will be raising in the third quarter, possibly the fourth quarter of this year. So anyway, with stock index futures a little bit lower now, I think we can see a recovery, and there's a very good chance we can see the indices trading higher on the day. Longer term, still looking for higher prices as well. Now, over in the currencies, the dollar index under a little pressure. Some of this linked to the weaker than expected new home sales report. Also, we had the euro currency trading a little bit higher, even though we did have some mildly bearish economic news from the Eurozone. The pound under a little pressure after retail sales in the UK coming in on the weak side. And the Australian dollar lower earlier, but bouncing off of the lows. The weakness that we did see in the overnight trade in the Australian dollar due to weak Chinese economic numbers. However, there has been a good recovery in the Aussie dollar, with crude oil now trading over $1 higher. Also, the Canadian dollar advancing as energy prices firm up. Now, of all of the currency markets, we like the commodity currencies the best to the upside. That would be the Canadian dollar and the Australian dollar. But by far, the better of the two is the Canadian dollar. And that should be the leader to the upside. So look for further gains in both currencies, but any strength that we see is likely to be mainly in the Canadian dollar. Now, over in the interest rate markets, some pressure developing yesterday, a little follow through today. Really not much of a bounce with the new home sales coming in on the weak side, which should be bullish for treasuries. So we may drift a little bit lower near term, but I'm thinking that we are very much now in oversold territory. And I think over the next few days, I think would be a good opportunity to start getting involved with the long side for the 10 and 30-year issues. So good trading, everyone. And once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.